and the man who's been digging through the market trying to find the movers that we missed. All right, George, let's talk Upwork. Earnings from earlier in the day, and a pretty interesting volatile session for a stock that we've talked about on this segment before, that is tech, but also within the employment side and the services offering an employment marketplace. So how are they doing right now?
Yeah, OJ, the secular technology companies are still struggling as of late, including some of the big ones like Apple, but that's a different story altogether. But Upwork, it's actually a technology company, but it's also a services company, particularly in the employment services. And in particular, on top of that, it's contract work. So we know that there's this big push towards contract work. Self-employment has become a big thing, and it had been trending higher over time, but I think COVID really accelerated that trend. But this is a stock we have talked about at least a couple times over the last year. It's a fantastic company relative to its competitor like Fiverr Group, Fiverr International. Both of these companies are up, hundreds of percent over the last year. And this is a name that's still continuing to trend higher and is starting to prove out financially speaking, but also, again, from the standpoint of the trends, I think that will probably continue with contract employment. But overall, when it comes down to looking for contract workers, particularly in the digital marketing space, we know that media, content creation, editing, video, these are all sort of hot areas of the economy right now in services, and these can be done from a remote standpoint. And Fiverr is a place where if you're looking for those, Upwork is a place, both these companies, by the way, is a place where you can find these services. Now, so it's an online marketplace, so it's got an e-commerce, penchant towards it, but it also, again, is a technology company, and they reported earnings this particular quarter, 32% sales, beat the estimates. And we talked about some of the financials last quarter. One of the things we denoted, OJ, and I'll remember this, and I have it in my notes from last time, is that they were free cash flow positive, but they were profit negative last quarter. Sometimes, not always the case, but if you generate free cash flow and your profitability is negative, it can demonstrate potential turn. And that was the case this quarter. They were expecting flat earnings, beat those flat expected earnings by 6 cents. And those were two primary catalysts. Top line sales quarter over quarter also increased because last quarter they were about 24% year over year versus 32 this one.
George, what is the favorable economic dynamic for them? Clearly it seems like this has been a good environment as folks were looking for kind of more of like a gig economy that was functioning during this period. Is that the way you would describe it?
Honestly, yeah, I think the gig economy is here to stay, OJ. And I think if you just look at a lot of the stuff, just backing out a little bit, a lot of people are looking for, persistent and continual inflation. I'm not. I'm going contrary to that. We are showing signs of short-term inflation. But one of the things that actually goes against the grain for inflation is I don't see wage inflation. And wage inflation is not there because the way labor is now, it's not necessarily permanent income. People are moving more towards gig economy. They're hustling, for lack of a better word, and sort of the way we generate income in the past is changing. And so I think what we're doing is we're seeing an adaptation of how people are earning money, and they're doing so more on an independent basis. I don't think that's going to change, and I think that's where the demand for Upwork services lies. And the other thing is it's not just staffing solutions. It's not just the e-commerce component for looking for those particular, on-demand services. You have to look at some of the other ingredients associated with what this business is doing, which includes business services. They also have hiring services. So if you're looking to subcontract out work, they can help you do that, if you will. But there's also, again, payroll services. So there's other small business services that Upwork provides, not just essentially a platform where you can find somebody who is looking for a particular job, for a particular type of job or work, but it's also, again, those business services. Companies like Intuit, for instance, it's not just tax services anymore, it's more business services, including payroll processing. And I think these are catalysts that we're seeing in some of these more established businesses like Intuit, but also in these up-and-coming businesses like Upwork.
Okay. So, George, 3.5%, the move continues, and a persistent climb here that has been largely unperturbed by some of the other weakness in some of these quarantine plays. Though I will say at closing $53, they started at 64. So maybe not ideal from the candle and chart perspective, but we'll leave that for the chart master next time we look at it. George, a few others here. Let's go to TMST next. Wild move over the last couple of days. It's a materials company in the steel space. What are we seeing?
Yeah, there's a lot of aggressive moves happening. We're really in the midst of this internal, intra-market rotation, OJ, into materials, into commodities. Energy has been really hot, but Timken Steel, it's really a small company, especially in the specialty steel space, when it comes down to things like manufacturing precision parts and alloys, mechanical tubes, and these are important for industrial use, but also in the oil and gas space. So there's an element of overlap between steel and energy when it comes down to the materials that go into moving and producing energy, but also roller bearings. And these are components that are ubiquitous across all types of machines, whether it's construction machinery, automobiles, mining equipment, rail, and that's where Timken Steel's strong point is. Now, I will stress this: the stock has moved pretty aggressively in the last couple of days. It's really based upon pricing, and that's very accretive to a small company like this, which market cap is only about $400 million. KeyBank upgraded the stock today, but it's before earnings. I looked at the calendar; it looks like their earnings are tomorrow, the 25th of February, if I'm not mistaken. But they upgraded the stock beforehand. That's a pretty aggressive move. And they moved it to an overweight from a sector weight rating. And I think they're really seeing this steady continuation in producer prices, which I do believe is there. We're starting to see that happen from a lagging standpoint, but also I think from a leading standpoint. There is some merit to near-term inflation, especially in materials. But if you look at the financials for this company, last quarter, it was actually down year over year about 25% in sales. Profitability was down 7%. But here's another thing. Free cash flow last quarter was higher by about $37 million. And if you look at that relative to about $850 million in sales, that's a free cash flow margin on a non-profitable quarter. This is last quarter. That was in the 10% range. So again, is this a sign that the stock will move higher because of earnings? In other words, as free cash flow starts to move positively, so does EBITDA. I'm not going to say for sure, but KeyBank's pretty aggressive in this call right before earnings. So it's an interesting play. It's a small play, but I think it's certainly interesting in this environment.
The old pre-earnings note, right? The old pre-earnings bull note. You don't get a lot of them, and oftentimes it means there's some kind of insight. Right. Hey, George, we've got literally 45 seconds, okay? But I want to get to your last one real quick. OMI, it's the biggest mover out of all of them. Healthcare stock up 30% today, breaking out healthcare solutions, products and services. What happened here?
Yeah, well, this is a story for Owens Minor, OJ, and I wish I had more than 45 seconds, but basically they're more in the consumable medical supplies, surgical gowns, masks, and all those things that have been in high demand as of last year because of COVID. But they published earnings across the board were actually really good. They came in with sales that were higher 8% year over year, and that's relative to a decline in sales year over year last quarter. But they're actually showing some very strong movements in their global products sales, which were up about 58%. I think the weak dollar has been benefiting this business. And they also show that increase about 21% on a quarter over quarter basis. So what's happening with this company, just in a nutshell, is they're showing operational improvements, top line improvements. Because if you look at gross margins, they're around 15% last quarter. They boosted that by about 400 basis points. So that's nearly about 25 to 30% increase in gross margins. And that's trickled down to higher operating margins. And so what's happened here is you're seeing operational improvements from an internal standpoint, but at the same time, they're very adept at telling us, and this is what they noted primarily in their conference call, is paying down debt. One of the challenges Owens has had relative to some of their major competitors like Cardinal Health or AmerisourceBergen or even Abbott Labs is leverage. And this is a case where the company's operational favorability is improved, but at the same time, their non-operational financial performance is improving because they're paying down debt, and that's reducing their leverage. At the same time, they're really showing some operational and sales efficiencies. And you're getting sort of twofold catalyst here. And that's why you see some medical supply companies, which again, are really moving like some of these tech names, because you're getting sort of a twofold catalyst, both operational improvement, but also financial performance.
Okay. George, thank you. I think it was like 60 seconds, but that's all right. Okay. We'll take it, George. Nice work on the overlooked stocks.
All right.
Appreciate it, Mr. T, as always, joining us from Solid
Contributor
here on the TD Ameritrade Network.